The Construction Market Guide is designed to provide timely information to construction executives to help them attract, train, and retain the most highly skilled workforce possible, to understand input costs and the direction of those material prices so they can bid as competitively as possible, and to understand the broader economic environment so they can forecast and make solid decisions for their firm.
The unemployment rate in construction actually ticked higher this past month, up 0.5% to now a level of 7.3% unemployment in the construction sector. We see construction sentiment weakening as backlogs have shrunk and the confidence level in construction, the construction confidence index, weakening a bit from prior levels, which is a cause for concern. We see a similar story in the Architectural Billing Index, which is a leading indicator for projects in the pipeline, and particularly weakening in the Northeast with the lowest levels of architectural billings across the country. Again, a cause for concern for future construction projects. Material prices, particularly lumber, have finally moderated after a huge spike. Lumber's down 18.2% on the month, still up 37% year over year over the last 12 months. Oil prices had taken a big hit and are now bouncing back a bit, up 23% on the month, but still down 22% over the year. Asphalt paving mixtures, iron and steel, more moderate in terms of the increases that we see. And a lot of that tied to new housing starts, which after dropping initially in the pandemic have spiked back and are now at relatively high levels and expanding. Interest rates, kind of the fuel for that fire, with the 10-year Treasury, one of the key metrics we look at for mortgage rates at a 0.92% level, having dropped almost 1% over where they were a year ago. The stock market has really zoomed back and led by small company stocks, which are now up over the last 12 months, 19.3%. The S&P 500 up almost 17% over the last year. And real estate prices, the laggard, down about 5.3% over the last 12 months. With stock prices at all-time highs, we think it's a good time to review your portfolio, see if the risk level currently makes sense, if it's a good time to take some risk off the table, and also encouraging construction owners to take a bit more cautious approach, looking ahead as these indicators start to weaken a bit, to keep a little more in cash. Good time overall to review your financial plan and your financial position as to how you're allocated now. If we can help you with that, we'd love to. Please reach out to us, and thanks for listening. Have a happy holiday.